EXW, CIP, DDP, FOB sounds like a whole lot of alphabet soup, right? These three-letter codes are actually just a few of the 11 globally accepted Incoterms 2020 rules. And as an exporter, you need to understand them. I'll explain, but first make sure you subscribe to this channel so you don't miss any of our basics of exporting videos, sharing practical advice for exporters and importers. Incoterms define how delivery costs and risk are divided between buyers and sellers in international transactions. Let's take a look at how Incoterms are used and when to use each of the 11 terms. Incoterms are published by the International Chamber of Commerce and are known and implemented by all major trading nations. Different countries have different trading practices, so a common set of rules was needed to prevent misunderstandings, disputes, and litigation among traders. It's no small task to be in charge of international standards. 13 ICC commissions made up of private sector experts from across the world decide on these international trade terms. The most current set of terms, Incoterms 2020, went into effect on January 1st, 2020. They are typically updated every 10 years. That's what Incoterms are. Here's what they are not. They're not the same as the shipping terms you use for domestic transactions. Those terms mean something totally different when shipping internationally. They don't say anything about the price to be paid, when payment will be made, or the method of payment to be used. They don't deal with the transfer of ownership of the goods, breach of contract, or product liability. These issues need to be considered in the contract of sale. They can't override any local country laws. Definitions. Certain Incoterms work better for certain modes of transportation. Let's dive into a brief summary of each of the 11 Incoterms. I'll group the terms based on the mode of transport. Before I start, make sure you check the notes below to download an Incoterms chart of responsibilities. It's an easy way to compare the 11 terms. Incoterms for any mode of transport. EXW or Ex Works. Under Ex Works, the seller fulfills its obligations by having the goods available for the buyer to pick up at its premises or another named place, like a factory or warehouse, on a date agreed on by both parties or with an agreed upon time frame. The seller needs to provide the buyer the information they need to take delivery of the goods at that time. With EXW, the buyer bears all risk and costs. Free carrier. With free carrier, the seller is responsible for either making the goods available at its own premises or a named place. In either case, the seller is responsible for loading the goods on the buyer's transport and is responsible for delivery to the port and export clearance, including security requirements. Risk transfers once the goods are loaded on the buyer's transport. Carriage Paid To. The seller clears the goods for export and delivers them to the carrier or another person stipulated by the seller at a named place of shipment. Seller is responsible for the international transportation costs associated with delivering goods to the named foreign place of destination. The transfer of risk, on the other hand, transfers from the seller to the buyer as soon as the goods are delivered to the international carrier. That means the buyer assumes the risk of loading the goods on the carrier and during the international transport of the goods. Carriage and insurance paid to. With carriage and insurance paid to, the seller clears the goods for export and delivers them to the carrier or another person stipulated by the seller at a named place of shipment, at which point the risk transfers to the buyer. Seller is responsible for the transportation costs associated with delivering goods and procuring insurance coverage to the named place. Delivered at place. Seller clears the goods for export and bears all risks and costs associated with delivering the goods to the named foreign destination, not unloaded. DAP means the buyer is responsible for all costs and risks associated with unloading the goods and clearing customs to import the goods into the named country of destination. Delivered at place unloaded was previously named delivered at terminal. It was renamed DPU because the buyer and/or seller may want the delivery of goods to occur somewhere other than the terminal. This term is often used for consolidated containers with multiple consignees. Delivered duty paid means the seller bears all risks and costs associated with delivering the goods to the named place of destination, ready for unloading and cleared for import. DDP is a risky term for the seller because they may not be fully aware of the import clearance procedures in the country of import, or how to find a competent local customs broker. The seller must also deal in a foreign currency, and not all countries allow for non-resident importers. Because of all these hurdles, DDP may also have questionable value to importers, since they must depend on the seller to navigate these challenges. Incoterms for sea and inland waterway transport. With free alongside ship, the seller clears the goods for export and delivers them when they are placed alongside the vessel at the named port of shipment. Buyer assumes all risks and costs for goods from this point forward. This is not a commonly used term except for goods that may be difficult to load. Free on board. The seller clears the goods for export and delivers them when they are on board the vessel at the named port of shipment. Buyer assumes all risks and costs for goods from this moment forward. This term is also not commonly used, except perhaps by U.S. companies that misuse the term because they confuse it with the domestic term FOB. Cost and freight. Seller clears the goods for export and delivers them when they are on board the vessel at the port of shipment. Seller bears the cost of freight to the named port of destination. Buyer assumes all risks for the goods from the time the goods have been delivered on board the vessel at the port of shipment. With cost, insurance, and freight, the seller clears the goods for export and delivers them when they are on board the vessel at the port of shipment. Seller bears the cost of freight and insurance to the named port of destination. Buyer is responsible for all costs associated with unloading the goods at the named port of destination and clearing goods for import. Risk passes from seller to buyer once the goods are on board the vessel at the port of shipment. So you've agreed on a term. Now what? Include the chosen term on the sales contract, purchase order, pro forma, and commercial invoices, and other documents. These documents should include the chosen Incoterm, followed by the named port, place, or point. By correctly using Incoterms, you'll be able to partner more harmoniously, transport and deliver your goods more easily, and get paid more quickly. And who doesn't want that? If you liked this video, like it, share it, and make sure you're subscribed to our channel. Watch for more videos sharing real practical advice about export documentation, compliance, and the latest changes affecting exporters. You'll also find hundreds of articles about every aspect of exporting on our blog, shippingsolutions.com/blog. You'll find a link below.